was introducing you guys to Forex, and I was saying in this guide, we are going to talk about Forex Basic. We are going to cover global economy, how the global economy affects Forex, how to analyze the market, and lastly, how to get funded. So we are going to cover everything from beginner to advanced level. So by the end of this class, you guys will be able to do some analysis on your own. So we all know Forex is foreign exchange, changing one currency to another. But the part of Forex we are all aware of is the offline aspect, the physical aspect that has to do with you going to meet, let me say, the bureau de change to swap your dollar for naira. So the part of Forex we are dealing with is the online aspect. And this aspect of Forex deals with the central banks and how they transfer funds to one another. Yeah. So the first question is, who are the participants in the Forex market? Like I told you, we have investment banks, we have central banks, we have hedge funds, we have financial institutions, and finally retail traders. And retail traders is me and you. We fall into the please, can you mute your mic? Who is this? Okay, as I was saying, we have retail traders, and this is where me and you fall under. So we are aware that central banks, hedge funds, financial institutions, they control the financial market.
Even birthdays, yes. Who West Ham play with? I don't say Ball and this Palace.
Yeah, guys. So retail traders is where me and you fall under. So sorry, I had to remove that person from the live chat because the person was obviously disturbing us. So as I was saying, retail traders is where me and you fall under because we are simply trying to understand how the central banks transfer funds to each other, how the investment banks deal with their investment, and hedge funds, financial institutions. So we traders, me and you, we fall under the category of retail traders. Yeah, so you can ask yourself, what is traded on the Forex market? We have gold, our normal gold. We have oil, we have shares, we have crypto. Yeah, crypto. All these things fall under Forex. We have our normal currency pairs, that's your AUD card. This is just Australian dollar to Canadian dollar. AUD JPY, that is Australian dollar to Japanese yen. So yeah, what's a Forex broker? A Forex broker they are like firms that give you access to trade the Forex market. So like back in the days, how trading was done is that there used to be an office where traders would go deposit their money, and whenever they want to buy or sell a commodity, they will call their broker and say, hello, I want to buy gold. Can you place an order for me? So that was how trading was then back in the day. So even before people had access to computer, trading was very, very active. So you can see that trading has gone far, far back in the day. So now, like, we all have access to smartphones, computers, and with that, these brokers now have developed websites and apps where you can just go there and deposit your funds and use your smartphone, place trades. So these brokers give us tools for us to use to trade the financial market. Yeah. So brokers act like middlemen. Like when you click a buy, they process that order and they place it for you. So yeah, that's it. So also on brokers, like there's how this Forex thing works. Like I said, for you to participate in the Forex market, you need huge amount of funds. Like if you notice what I mentioned here, like the participants in the Forex market, you have your central banks, your investment bank, hedge funds, financial institution, and I told you that will fall under retail traders. So we as retail traders, we don't have that huge amount of funds to trade the Forex market. So these brokers, there's what they normally do. They have what they call servers, where they accumulate funds from retail traders and join them together so that whenever you are placing a trade, like all trades are being sent to the server as one. So everything is going to be like a large institution placing an order. Yeah, so that's the power of brokers and how brokers help us to trade the Forex market. So we are going to go into some little analysis. By analysis, I mean how we are able to speculate price. Yeah, so basically they have three ways to analyze the Forex market. We have our technical analysis, we have our fundamental analysis, and sentimental analysis. Yeah, so can you hear me? I don't know if the audio is quite clear now. So
yes, I can hear you.
yeah, that's nice. So explaining on technical analysis. Technical analysis, like the word technical means like you're using knowledge on the charts to predict or speculate where price is likely to go. Okay, thank you. You can hear me. That's nice. So technical analysis, we tend to use our Forex charts. We use our Forex charts and indicators. So what I mean by charts, like we have two types of chart. Chart is just like a visualization of price, the movement of price in the market. So we have here our Japanese candlestick charts and our line charts. But most traders, we make use of this Japanese candlestick chart. So indicators, on the other hand, are like tools that tell us when to buy and sell in the market. So these tools they have been programmed already to spot when the market is going to reverse. So most traders make use of indicators, but not all traders. Most traders stick to normal chart analysis. So I will be teaching you guys a very simple technical analysis for you to understand how to trade the market. So I call it our like step 1, 2, 3, because there is one thing about the market, like the market is always moving in waves. Like I was telling someone, when Naira got to about 1,200 per dollar, like Naira hit its all-time high. I was telling that person that that is the wrong time to buy Naira because Naira is at the highs. Normally, when market moves to create a high, there's always a retracement. Market will always going to come back before it goes back up. So yeah, buying, like that's where the analogy comes in, like you sell at the high and buy at the low. So like I said, market moves in waves. So if market is trying to go up, it's going to create a high, then reverse, create a low, and then create another high. That's what I call step 1, 2, 3. Your first step is the push, either upward or downward. The second leg is your retracement leg. So it's during that retracement leg that you get to find your entry for another push upwards. So using that, we are going to use that to view the Bitcoin market. So this is the current price for Bitcoin. As you can see, Bitcoin has created a first push up. So we have our first leg here, and we are to expect a downward movement before we can say, let's buy Bitcoin. So when people are rushing to buy Bitcoin now, we are going to stay out of the market. So we are expecting another retracement before we buy Bitcoin. Yeah. So aside that, on technical analysis, we are going to go into fundamental analysis. Yeah. So on fundamental analysis, we tend to analyze like the news, the economy of the world, and how it affects Forex. So this is where we get terms like interest rates, inflation, quantitative easing, central bank investments, GDP, and all of that. So understanding that, we are going to understand how fundamental analysis affects the market. So basically, the two main factors in fundamental analysis is our interest rates and inflation. So yeah, interest rate and inflation relationship plays a huge part as to why price of a currency rise or fall. So basically, interest rates, if you talk about interest rates, it just means like the returns that investors get when they buy a currency. So like investors would like to invest more in a country with higher interest rates than in a country with lower interest rates. So in Forex, whenever we get news that a country is looking to increase its interest rate, it's a positive news that the currency is going to increase. While when a country reduces its interest rate, it is likely to reduce. So on the other hand, inflation is just the purchasing power of price, is the purchasing power of a country's currency reflected as price for goods and services. What this simply means is that looking at Nigeria, for example, now, you need more of Naira to purchase lesser goods because there's high inflation. So when there's high inflation, you need like more of that currency, like is the purchasing power of the currency reflected as prices for goods and services. So countries with lower inflation are countries that investors will like to go in because like the prices are affordable for consumers. So central banks, they look to control inflation by raising or lowering interest rates. Yeah, so whenever they raise interest rates, they have a decrease in inflation. So they use this interest rate to control inflation. Whenever they raise the interest rate, there's going to be a decrease in inflation. And whenever they lower the interest rate, there's going to be an increase in inflation. So inflation should be normal. It should not be too high or too low. It should just be normal. So the central bank is in charge of making sure that the inflation in a country is stable. So we also have what we call quantitative easing. So if lowering interest rate is not an option, the central bank will embark on quantitative easing. So quantitative easing is like putting in money into the system. So whenever you put in money into the system, it's going to stimulate economic activities and increase consumer spending. So this in turn causes inflation to go lower. So if if lowering interest rate is not an option, a country will look to engage in quantitative easing. Yeah. So the effect of quantitative easing is that it causes inflation rates to go lower, thereby increasing inflation. Like I said, inflation should be considered good or bad in the sense that increasing it, if the country is like Nigeria, for example, now we are facing high inflation, so they should be looking to reduce it instead of increasing it. So to reduce it, we engage in the opposite of quantitative easing, that is quantitative tightening, that is removing funds from the system to reduce economic activities, thereby making Naira more valuable. Yeah, so we have another thing, central bank intervention. So whenever a country buys a currency on the foreign market, in order to increase or decrease the nation's currency, we call that central bank intervention. So using Nigeria as an example again, so if Nigeria is to buy large amount of dollar, it's going to cause the value of Naira to increase. Naira is going to gain value because we have this excess of dollar in circulation in the country. So central bank intervention is a measure taken by the central bank to increase or decrease the country's currency. So we also have GDP, gross domestic product. This simply means it represents the monetary value of all financial goods and services produced locally in the country. So countries have high and low GDP. Countries that have high GDP are countries that produce more goods and services locally. So I don't think Nigeria has a high GDP because I don't think we produce a lot of local goods in Nigeria. So all these things are the factors affecting Naira in the country. So you should take note of that. So investors would look to invest more in a country that has a growing GDP, while investors will likely run away from a country that has a declining GDP. Yeah, so we also have what we call intermarket analysis. So in intermarket analysis, we tend to study the correlation between countries and markets. And what does that mean? Like, if you take Australia, for example, now, like Australia's major import is iron ore, and China is a heavy importer of iron ore. So China and Australia have intermarket relationship. So these countries now, like China, if China should stop importing metals from Australia, it's going to affect Australia's economy. Yeah, so when we are doing analysis on a country's economy, their import and exports, these are factors we look out for to know if the country's currency is likely to increase or decrease. So imagine if China should cut on its imports from Australia, we would say that, yes, considering this factor, Australian dollar is going to fall. So this is how intermarket analysis plays out. So finally here we have global crisis. So we have experienced some global crisis in the world, like our COVID-19, Brexit, and all that. So during a global crisis, we can see that the investors in the market, they tend to run off from what we call riskier assets to safe haven assets. So like riskier assets are like assets that are considered to yield more value. So during financial instability, like during crisis, those assets are regarded as risky assets. So those assets are like your GBP, your riskier assets, your AED dollar, NZ, New Zealand dollar, Canadian dollar, GBP, and you have your safe haven like gold. You have gold, silver, and Japanese yen. So let's have this chart on GBP JPY. Like I said, GBP JPY, GBP British pound is considered to be a risky pair. So you can see during the Brexit, you can see that the chart was selling, British pounds was selling because more investors, they were running out of British pounds and they were holding more of Japanese yen. So you can see why the British pound chart is going down. So you can also see how this affects the market. So looking at your COVID-19 chart, you can see that during COVID-19, gold hit its all-time high of 2000. So you can see investors running off to other safer pairs aside from your normal dollar, British pounds, and all that. So this is how fundamental analysis is done. So guys, don't stress yourself because this class is going to be recorded and I'll make sure that I share it with you guys. Yeah. So finally, we have what we call sentimental analysis, and sentimental analysis, like sentiments, is just following people's ideas on the market, like sentiments, what people see or speculate on the market. So you have this website here, cftc.gov, and they release a report showing the holdings of traders. So here you can see where we have long here and short. So it's showing us the total amount of traders that are long. When we say long, means they are buying this asset. And when we say short, means they are selling this asset. So here now we can see that we have more sellers than buyers. So if we have this idea and we combine it with our fundamental analysis and technical analysis, we have a clear direction as to what the central banks are doing and where price is more likely to go. So you can see how we are combining three analyses to get a clearer picture of the market. And funny enough, most traders are not aware of these ways of analyzing the market because technical analysis has been made the thing of the day. If you ask any trader, they are most likely technical traders. So finally, yeah, I'd like to talk about prof firms and how you can have access to them to trade the financial markets. So prof firms are firms that give traders capital to trade the financial market, and there's usually a test phase that traders must pass in order to get a live account. As you can see, like I applied for a challenge on a company, my funded FX, and I was able to pass this challenge. And after you pass this challenge, you'll be able to get this certificate as a trader. So, guys, okay, guys, you can unmute your mic if you have any question to ask on our three ways to analyze the Forex market. So just raise your hand if you have a question to ask. All right, you can unmute so I can hear you speak.
Hello?
Yeah, I can hear you.
Okay, good evening, my brother.
Yeah, good evening.
Okay, my name is Prince Rio.
Yes.
I'm listening to you. I've been listening, sorry, from Port Harcourt here.
All right.
Actually, I want to thank you, first of all, for the lowdown. But then I also want to know from what you give us now, it's more of theoretical
Yes.
aspect of the analysis.
Yeah.
So my question is just like kind of, is he what is supposed to be like the training is all about?
Well,
Or are we going to delve into
the
the practical aspect of it proper?
yeah, that's a good question. So I have a lot of videos on practical aspects on my YouTube channel. So also, if you are interested in mentorship, yeah, I'm hosting another class on the 20th of December. So if you are interested in mentorship, maybe you want to learn my Forex strategy, how I trade and other things, it will be a nice opportunity for you. Yeah, so any other question, you can just raise your hand. Oh, okay.
Hello, good evening.
Yeah, hello, good
Yes,
evening, sir.
hello, good evening.
Can you hear me?
Yeah, my name is Abundantly Blessed.
Okay.
If somebody actually want to go into this forex trading,
Yeah.
which aspect of this analysis is best for one to learn as a retailer
Well,
trader? Which of the analysis is better for
okay.
one to actually concentrate on?
I'll tell you from my point of view. I'm more of a technical trader, but I also look into fundamental aspects because it makes me more certain as to where price is more likely to go. So most traders most traders are basically technical traders. Most traders combine technical with sentimental. Most traders combine the three together. So it's a personal stuff. Yeah. So any other question? I think I'll take one last question. All right.
This technical analysis,
Yes.
like how long would somebody need to understand or master this technical analysis before you can even venture into trading?
Well, it can take 1 month to learn it. So like me, I learned on my own and I spent like 2 years trying to learn how to trade technicals. But then if you have a mentor that is going to guide you, it's going to make the journey shorter for you. Yeah.
Hello.
Yeah, I can hear you.
Okay. Good evening. My name is Mark Dove,
Yeah.
and I'm talking from Lagos. I actually came from Port Harcourt to Lagos.
All right.
Okay. I want to know how can one that has a zero knowledge of forex go about it? Like what I told you now, that I actually relocated from Port Harcourt down to this place.
Yes.
And most of the people like Fields, Comrade Fields is my guy. He's in Port Harcourt, and I'm not in Port Harcourt. Most of the like you, I don't really know where you are. For me, I'm in Lagos.
Yeah, I'm in Port Harcourt right
So,
now.
you see, so
Yeah.
I don't really know how we are going to contact. I'm not the person that likes this
Yeah. So
online. I
see,
like being in class and seeing the
okay.
person.
So if you are looking for physical class, I think we can arrange for that in Port Harcourt. But then I feel like online is still a good way to go about things.
I'm not in Port Harcourt. That's just it.
Then we can
I am
stick to
not in Port
online
Harcourt.
then.
Okay. So if
Yeah.
there is any way we can do it online too, no problem.
All right. So I'll be sharing this guide on Comrade Fields Facebook. So you guys can go there, rewatch this video, and also if you are looking to learn, I'm giving a 60% off, and it will be communicated to you on Comrade Fields Facebook page. So like thank you guys for joining me live.